This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Factory activity in many Asian economies shrank in June as U.S. tariff uncertainty kept demand low, but signs of modest relief for manufacturers raised the stakes in trade talks with Washington amid the region's gloomy economic recovery prospects. The underlying softness in private surveys released on Tuesday highlights the challenges facing policymakers as they try to navigate U.S. President Donald Trump's moves to shake up the global trade order with sweeping tariffs. Japan's manufacturing activity expanded for the first time in 13 months, and South Korea's activity contracted at a milder pace, private surveys showed on Tuesday.
Saudi Arabia, the world's biggest oil exporter, may raise its August crude oil prices for buyers in Asia to the highest in 4 months, after spot prices surged during the Iran-Israel conflict and on robust summer fuel demand, trade sources said. The August official selling price, OSP, for flagship Arab light crude may increase by 50 to 80 cents to between $1.70 and $2 a barrel from the previous month, 5 sources from 4 refineries said in a Reuters survey. Such a rise would place the August Arab Light OSP at the highest level since April, Reuters data showed. The August OSPs for Arab Extra Light, Arab Medium and Arab Heavy crude are expected to rise 50 to 60 cents a barrel from July, the survey showed.
Moving on to the top news in the energy sector.
Analysts have marginally lifted their oil price forecasts after the flare-up of tensions in the Middle East, but rising OPEC Plus supply and a tempered demand outlook continue to weigh on crude, a Reuters poll showed on Monday. A survey of 40 economists and analysts in June forecast Brent crude will average $67.86 per barrel in 2025, up from May's $66.98 forecast, while U.S. crude is seen at $64.51, above last month's $63.35 estimate. Prices have averaged roughly $70.80 and $67.50 so far this year respectively, as per LSEG data. The Iran-Israel conflict and the U.S. decision to intervene have led to sharp swings in oil prices this month, with Brent prices touching $81.40 before falling to settle at $67.14 after the ceasefire.
Global imports of liquefied natural gas, LNG, ticked higher in the first half of 2025 as stronger European demand pulled cargoes away from Asia. Total imports of the super-chilled fuel were 208.62 million metric tons in the first 6 months of this year, up 1.7% from the 205.11 million for the same period in 2024, according to data compiled by commodity analysts Kepler. Asia, the top LNG buyer, saw imports drop 9.09 million tons, or 6.4%, to 133.41 million. While Europe's arrivals jumped 21.6%, or 11.8 million to 66.43 million. Next, we have the top news in metal markets. Coal used to make steel got a break in the latest version of President Donald Trump's tax bill, a subsidy that could be worth hundreds of millions of dollars over 10 years for a fuel that is mostly exported to countries including China. In April, Trump signed executive orders that directed Chris Wright, the Energy Secretary and former fracking CEO, to determine whether metallurgical, or MET, coal is a critical mineral, which he did in May. In the latest version of Trump's so-called One Big Beautiful Bill that the Senate released over the weekend, MET coal can claim an advanced manufacturing production tax credit, available for critical minerals, that would pay 2.5% of costs for the fuel.
China will extend its anti-dumping duties on some stainless steel products from certain countries and regions for another 5 years from Tuesday in a bid to protect domestic manufacturers. Imports of stainless steel billet and hot-rolled stainless steel plate originating from European Union, United Kingdom, South Korea and Indonesia will remain subject to the anti-dumping duties ranging from 20.2% to 103.1%, China's Commerce Ministry said in a statement. The harm to the domestic industry will likely to continue if the anti-dumping measures are terminated, the statement said.
We will now look at the top news in the agricultural sector.
Chicago corn fell on Tuesday, with prices under pressure from a weekly U.S. report showing robust crop condition, boosting prospects of higher output amid plentiful Brazilian supplies. Soybeans eased as quarterly stocks data from the U.S. Department of Agriculture, USDA, pegged June 1st reserves above market expectations, while wheat slid on harvest pressure. The most active corn contract on the Chicago Board of Trade fell 0.9% to $4.21 minus 1/2 a bushel. As of 0257 GMT, and soybeans lost 0.3% to $10.24 minus 1/4 a bushel. Wheat fell 0.1% to $5.38 a bushel.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.